How would you like to increase your pension contributions by up to 38% with the taxman footing the entire bill? It seems too good to be true, but this is possible if you stop making pension contributions personally and get your employer to make them all for you. This is commonly known as salary sacrifice, but sometimes it's also known as salary exchange or smart pensions, and is an approach used by some of the country's biggest companies and universities, including, I understand, BT, Tesco and the BBC. I believe that a salary sacrifice pension is the best tax saving opportunity available to most regular employees on a salary. So, how does it work? Salary sacrifice enables you to save national insurance in addition to the income tax relief you already receive when you make pension contributions. With the recent increase in national insurance rates from the 6th of April 2022, salary sacrifice has become even more attractive. Most pension savers only receive income tax relief when they contribute to their pension. The income tax relief is attractive at 20% for basic rate taxpayers and 40% for higher rate taxpayers. But it's not the maximum amount of tax relief available. As an employee, when you contribute personally to your pension plan, there is no refund of all the national insurance paid by both you, the employee, and your employer. With the latest rates of national insurance that are payable, as much as £283 of national insurance is now paid by the employee and employer on £1,000 of salary. That's over 28%. The huge benefit of salary sacrifice is that it's possible to put a stop to these national insurance payments because your employer makes your pension contributions for you. That's how salary sacrifice works. Pension contributions paid by employers are exempt from national insurance. So instead of your employer making national insurance contributions to HMRC, they may agree to add the NI that they would have had to pay on the part of your salary you sacrifice into your pension pot instead. Now, that's got to sound attractive. So what's the catch? Where does the salary sacrifice part come in? Well, because your employer has to pay all your pension contributions on your behalf, you in return have to sacrifice some of your salary. However, it's important to know that your net take-home pay does not fall. It remains exactly the same. You're sacrificing some of your salary, but not your net income. With salary sacrifice, there is no extra cost for either you, the employee, or for your employer. I mentioned that you can boost your pension contributions by up to 38% using a salary sacrifice scheme. So how does that work? Let me talk you through a real life example, one of the calculators I use in my financial planning business when I'm trying to explain how salary sacrifice works. So we've got here a made-up company, any good employee, any good employer. Employee is Miss Tax Saver, and she's a UK taxpayer excluding Scotland. Sorry, Scotland, but I'm going to work on England and Wales because you've got slightly different tax rules there. The employer is paying national insurance, and Miss Tax Saver is earning £25,000 per year. And she pays currently 4% into her pension. And I haven't included employer contributions because it's kind of not relevant for this exercise. And my objective is to get a larger amount of money in the pension, but not affect Miss Tax Saver's net salary. So she gets the same amount of money as she would have done before the exercise. So we're also working over here that the employer's NI contribution will give 100% of their saving for this exercise into Miss Tax Saver's pension. So let's just go down to here. So this is before we do anything. The employee is earning £25,000. She's paying £2,486 in income tax, £1,646.98 in national insurance, and is paying £800 a year into her pension, which of course gets an extra 20% added, taking it up to £1,000 actual contribution that lands inside her pension arrangement. And her net income is £20,067.03. So that's what she gets. And of course, the employer will be paying national insurance contributions of £2,392.95. And so the total cost to the employer for having Miss Taxsaver on the payroll is 27,392.95. So what do? Right, let's just go over here. We then reduce her income. That's the first thing we're going to do, is reduce her income from £25,000 to £23,801.50. That's the salary sacrifice. We're reducing it from 25 to 23. Then she's paying, because she's earning less, she's paying less income tax, £2,246.30, comparable to £2,486 before we did any arrangement. And national insurance now, because again she's earning less, is £1,488.17 against £1,646 before we put the salary sacrifice arrangement into place. So her net income is £20,000.67, as you can see, exactly the same as the previous arrangement. Now the cost to the employer, so her revised gross income is £23,801. That reduces the employer's national insurance contributions to £2,212 against £2,392 on the previous arrangement. And now the employer is making a pension contribution of £1,378.88. So the total cost to the employer is £27,392, which is exactly the same as it was before. But they're paying their national insurance savings directly into the into the pot. So we've got so the extra pension contribution is £378.88, and is exactly the exactly the same amount of net salary that Miss Taxsaver would have had before. So hopefully that's clear, and you can see through those calculations and maybe replay them. If I just bring them all into scale there, so that you can just kind of take some time to just work through those numbers. And obviously, if you have any queries, just pop them in the comments and I'll do my best to answer them. So in my previous example, we've got £1,000 going in before we did the salary sacrifice, and we've got £1,378 going in if we do the salary sacrifice for no loss in salary. So why don't more people do salary sacrifices? The impact upon the value of your pension pot can be enormous. The government was concerned about the amount of money lost from salary sacrifice schemes, and as a consequence, the income tax and employers' national insurance advantages of some salary sacrifice schemes have been removed. So why don't more people do salary sacrifice, as the impact upon the value of your pension pot can be enormous? Well, I think it's just people don't understand it. They don't realise the massive benefit that can be that can be gained for them. In my opinion, if you're able to explore salary sacrifice and it's right for you, I'd take advantage of it now. It's always possible the government will change the rules at any time and abolish salary sacrifice pensions. You may be wondering which pension schemes are suitable for salary sacrifice. In theory, salary sacrifice works with almost all pension plans, including self-invested personal pensions known as SIPs for short, personal pensions including group and individual plans, stakeholder pensions again including group and individual plans, and occupational pension schemes. The main factor when working out if your pension plan will work for salary sacrifice is whether it can accept employer contributions. Many SIP providers have special forms for this specific purpose. Another factor to consider is in relation to auto-enrolment. If a salary sacrifice pension arrangement is used by your employer in conjunction with their auto-enrolment duties, it is essential the pension plan is a qualifying scheme for auto-enrolment purposes. Your pension provider or your employer will be able to tell you if the scheme is qualifying or not. Salary sacrifice can be used by most employees as long as your employer supports your salary sacrifice aspirations, of course. You really need a good relationship with your employer. Finally, just to be clear, sole traders and other self-employed people cannot use salary sacrifice because there's no employer to make pension contributions on your behalf. If you're running through a limited company, of course, that's your employer, even though you may be the owner and director of that company. Thank you for checking out my YouTube channel. I'm Justin King. I'm a chartered and certified financial planner, and my aim is to help you live a successful life. And that often involves understanding your money. I host a podcast called the Retirement Cafe Podcast. You might like to tune into that. You can see a link to that in the description below. And of course, you can register to get my regular email, which is packed full of inspiration and tips for a successful retirement. For now, I'm Justin King, helping you live your best life.